Paradise was crumbling, and nobody saw it coming. Volcanic peaks, crystal waters, and the promise of island living had drawn thousands to Hawaii's shores. Real estate prices soared beyond imagination, with modest homes fetching millions and luxury estates breaking every record in the books. Developers raced to break ground on new projects, while buyers from the mainland competed with cash offers that left locals stunned and speechless. But when economic storm clouds gathered over the Pacific, everything changed overnight. Buyers vanished like morning mist. Contracts collapsed faster than dominoes, and Governor Josh Green found himself facing a crisis that would test every political instinct he possessed. The numbers were staggering. Home sales plummeted by percentages that real estate agents had never witnessed in their careers. Entire developments sat empty, their pristine units gathering dust, while sellers slashed prices in desperation. What triggered this spectacular collapse? Why did investors who once fought tooth and nail for Hawaiian properties suddenly abandon their dreams of island ownership? The answer reveals a web of economic pressures, regulatory failures, and market dynamics that nobody anticipated. This is the story of how Hawaii's housing boom became a nightmare that sent shockwaves through the governor's office and left an entire state questioning the price of paradise. The warning signs were there, hiding in plain sight among the palm trees and picture-perfect sunsets. Insurance companies had been quietly raising premiums for months, citing everything from natural disaster risks to construction costs that defied logic. Property taxes climbed relentlessly as local governments struggled to balance budgets while providing services to booming populations. Interest rates, once historically low, began their steady march upward, making those million-dollar mortgages suddenly feel impossible for all but the wealthiest buyers. Yet the real estate machine kept churning. Agents posted record sales on social media. Developers announced ambitious new projects, with waiting lists stretching for months. The governor himself appeared at groundbreaking ceremonies, touting Hawaii's economic resilience and the unstoppable appeal of island living. Behind the scenes, however, cracks were forming in the foundation of this seemingly indestructible market. Local families watched helplessly as their neighborhoods transformed beyond recognition. Teachers, firefighters, and small business owners found themselves priced out of communities where their families had lived for generations. Young professionals gave up dreams of homeownership entirely, accepting that renting tiny apartments for astronomical sums was their only option. The wealth gap widened into a chasm that divided the islands between those who could afford the new reality and those who simply survived it. Meanwhile, mainland investors continued pouring money into Hawaiian real estate, treating properties like stock portfolios rather than homes where families might build their lives. Entire blocks fill rentals that with vacations sat empty for months, their owners visiting for a few weeks each year while local residents searched desperately for affordable housing. The social fabric of island communities began fraying as longtime neighbors moved away, replaced by absentee owners who had no connection to the places they now controlled. The turning point came without fanfare or dramatic headlines. It started with a few canceled contracts, buyers citing changed circumstances or financing issues. Real estate agents, accustomed to multiple offers and bidding wars, suddenly found themselves with listings that languished for weeks without a single showing. Developers who had grown comfortable with pre-sales that sold out in hours watched as their newest projects attracted only modest interest from increasingly cautious buyers. Economic indicators that had been ignored during the boom years suddenly demanded attention. Household debt levels had reached dangerous heights as families stretched to afford homes that consumed enormous portions of their income. Credit card balances swelled as buyers covered closing costs and moving expenses. The number of people working multiple jobs just to afford rent climbed steadily, creating a workforce that was exhausted and financially vulnerable. Construction costs, already astronomical, continued climbing as supply chain disruptions affected everything from lumber to appliances. Labor shortages meant that even simple repairs took months to complete, while major renovations required budgets that would have purchased entire homes in other markets just years earlier. These realities began filtering through to buyers who realized that purchasing a property was just the beginning of their financial commitment. Insurance became the wild card that nobody had properly calculated. Policies that once cost a few $1,000s annually suddenly required five-figure premiums, with some properties becoming virtually uninsurable at any price. Climate change concerns, volcanic activity risks, and the isolated nature of the islands created a perfect storm of insurance challenges that sent carriers scrambling to reassess their exposure. The psychological shift was subtle but profound. Buyers who had once viewed Hawaiian real estate as a guaranteed investment began questioning whether the numbers truly made sense. Stories spread of purchases that had seemed brilliant just months earlier, now feeling like financial anchors dragging families toward bankruptcy. The fear of being trapped in overpriced properties with no escape route began influencing decision-making in ways that spreadsheets and market analyses could not capture. Governor Green, a physician-turned-politician who had built his reputation on understanding complex systems and finding practical solutions, suddenly found himself confronting a crisis that defied easy remedies. His administration had celebrated Hawaii's economic growth and rising property values as signs of success. Tourism revenues were strong, unemployment was low, and the islands appeared to be thriving by every conventional measure. But the housing market's collapse threatened to unravel this carefully constructed narrative. Local voters who had supported the governor's policies now faced impossible choices between staying in communities they loved and finding places they could actually afford. The political calculus was shifting as rapidly as the real estate market itself, with long-term supporters beginning to question whether their elected leaders truly understood the pressures facing ordinary families. Phone calls flooded the governor's office from constituents sharing stories of financial desperation and impossible decisions. Teachers explained how they commuted hours each day because they could not afford to live near their schools. Small business owners described watching their customer base evaporate as working families moved to cheaper areas. Young adults talked about postponing marriage, children, and career goals because the basic foundation of stable housing felt completely out of reach. The governor's initial responses followed predictable political patterns. Press conferences emphasized Hawaii's long-term economic strength and the cyclical nature of real estate markets. Statements pointed to federal policies and mainland economic conditions as primary drivers of local challenges. Staff members drafted talking points about infrastructure investments and job creation programs that would eventually restore balance to the housing market. However, the crisis deepened faster than anyone in the administration had anticipated. Real estate agents reported cancellation rates that shattered historical records. Mortgage lenders described application volumes dropping to levels not seen since the worst economic downturns of previous decades. Construction companies began laying off workers as new projects were postponed or canceled entirely, creating ripple effects throughout the broader economy. The governor found himself caught between competing pressures that offered no clear path forward. Developers demanded regulatory relief and tax incentives to restart stalled projects. Local residents pleaded for policies that would make housing more affordable and accessible. Mainland investors threatened to redirect their capital to other markets if Hawaii became too restrictive or economically unfavorable. Each decision carried enormous political and economic consequences that would shape the island's future for generations. The governor, who had once confidently navigated complex healthcare reforms and natural disaster responses, now faced a challenge that seemed to resist every conventional solution, setting the stage for confrontations and revelations that would test his leadership in ways he never imagined. Emergency meetings stretched deep into Hawaiian nights as the governor's senior staff scrambled to contain what was rapidly becoming a full-scale economic meltdown. Conference rooms that once buzzed with optimistic planning sessions now felt like war rooms, filled with charts showing plummeting sales figures and maps highlighting neighborhoods where for sale signs outnumbered occupied homes. The administration that had proudly celebrated record-breaking property values just months earlier now faced the humbling reality that their economic foundation was crumbling beneath their feet. Banking executives delivered sobering reports about mortgage default rates climbing faster than anyone had predicted. Properties that families had stretched every financial resource to purchase were now worth significantly less than their outstanding loan balances, trapping homeowners in a nightmare of negative equity. Credit unions reported unprecedented numbers of members seeking loan modifications, payment deferrals, and emergency financial counseling services that were overwhelmed by demand. The ripple effects cascaded through every sector of Hawaii's economy with devastating efficiency. Tourism operators discovered that their workforce was disappearing as hospitality employees could no longer afford to live anywhere near the resorts where they worked. Restaurant owners watched their customer base evaporate as local families cut discretionary spending to cover skyrocketing housing costs. Small retailers faced empty storefronts as foot traffic declined, and commercial rents remained stubbornly high despite the residential market collapse. Governor Green's public appearances became increasingly tense affairs where prepared remarks about economic resilience felt hollow against the backdrop reality for thousands of Hawaiian families. Press conferences that once featured ribbon cuttings and development announcements now focused on damage control and crisis management. Reporters pressed for specific solutions, while the governor's responses grew more defensive and less convincing with each passing week. Behind closed doors, heated arguments erupted between administration officials over policy responses that seemed inadequate to address the scale of the crisis. Housing advocates demanded immediate action to protect renters facing displacement, as landlords raised rents to compensate for declining property values. Business leaders pushed for tax relief and regulatory rollbacks that would encourage investment and development. Environmental groups opposed any loosening of protections that had helped preserve Hawaii's natural beauty, but also constrained housing supply. The governor found himself personally invested in every decision, as future became intertwined with the housing market's recovery prospects. Staff members who had once focused on long-term policy development now spent their days managing immediate crises and fielding angry calls from constituents whose lives had been upended by forces beyond anyone's control. The collaborative spirit that had characterized the administration's early years gave way to finger-pointing and blame-shifting as the pressure mounted. Local news outlets ran devastating stories about families forced to choose between staying in Hawaii and maintaining financial stability. Teachers described living in cars housing. Healthcare because they could not find affordable rental workers talked about leaving the islands despite loving their jobs because the cost of living had become impossible to sustain on their salaries. Young adults shared stories of moving back in with parents or leaving Hawaii entirely, abandoning dreams of building lives in the place where they had grown up. Real estate professionals who had once commanded premium commissions for facilitating million-dollar deals now struggled to find buyers for properties at any price point. Luxury developments that had pre-sold their entire inventory during the boom years suddenly faced wave after wave of contract cancellations as buyers discovered that their financing had fallen through or their circumstances had changed. Construction sites that had buzzed with activity just months earlier now sat idle, their partially completed structures serving as monuments to misplaced optimism. The governor's attempts to project calm leadership increasingly clashed with the visible evidence of economic distress throughout the islands. Public appearances became exercises in careful choreography as staff members worked to avoid locations where empty homes, stalled construction projects, or displaced families might provide unflattering backdrops for official photographs. The administration's messaging strategy struggled to balance acknowledgement of real problems with reassurance about future prospects. Financial analysts began questioning the fundamental assumptions that had driven Hawaii's real estate boom, pointing to structural issues that went far beyond normal market cycles. The island's geographic isolation meant that construction materials and labor had to be imported at enormous cost, creating baseline expenses that made affordable housing nearly impossible without significant subsidies. Regulatory frameworks designed for different economic conditions now seemed inadequate for addressing the unique challenges of an overheated market in rapid decline. Insurance companies accelerated their retreat from Hawaiian markets as claims related to natural disasters and property damage mounted alongside declining property values that reduced their ability to recover losses through foreclosure proceedings. Policies that had once been routine became difficult or impossible to obtain, leaving property owners vulnerable to catastrophic financial losses from events ranging from volcanic activity to severe weather. The governor's inner circle debated emergency measures that would have been unthinkable during the boom years, including direct government intervention in housing markets, massive public works programs, and regulatory changes that would fundamentally alter how development occurred throughout the islands. Each option carried political risks that could define the remainder of his term in office, while potentially creating unintended consequences that might worsen the crisis. Legislative leaders from both parties demanded special sessions to address the housing emergency, but disagreements over solutions created gridlock that frustrated everyone involved. Conservative lawmakers pushed for deregulation and tax cuts that they argued would stimulate private sector investment. Progressive representatives advocated for rent control, public housing programs, and restrictions on speculative investment believed would protect local residents from further displacement. Community organizations mobilized to provide direct assistance to families facing immediate housing crises, but their resources were quickly overwhelmed by the scale of need throughout the islands. Food banks reported increased demand as families redirected grocery budgets toward housing costs. Churches opened their doors to provide temporary shelter for people who had lost their homes. Social service agencies stretched their capabilities to breaking points while waiting for government responses that seemed always to be just around the corner. The governor's approval ratings, once buoyed by Hawaii's apparent economic success, began sliding as voters held him accountable for a crisis that had developed on his watch. Political opponents seized opportunities to criticize his administration's policies while offering their own solutions that often seemed equally inadequate to address the complexity of forces reshaping Hawaiian society. The approaching election cycle added urgency to every decision while limiting the political space available for bold or controversial actions. International attention focused on Hawaii's housing crisis as economists and policy experts analyzed what had gone wrong and what had seemed like a model of successful economic development. Academic studies examined the intersection of tourism, real estate speculation, and local housing needs that had created conditions for such a dramatic market collapse. Media coverage highlighted the human costs of economic policies that had prioritized growth over sustainability and affordability. As the crisis deepened and solutions remained elusive, the governor prepared for confrontations that would test every aspect of his political skills and personal convictions, knowing that the decisions made in the coming weeks would determine not just his own legacy, but the future of thousands of Hawaiian families caught in an economic storm that showed no signs of clearing. The breaking point arrived on a humid Tuesday morning when Governor Green's chief of staff burst into his private office with a folder of documents that would shatter any remaining illusions about containing the crisis. Overnight, 3 major resort developments had announced indefinite construction delays, citing financing withdrawals that left billion-dollar projects stranded with foundations poured but no capital to continue. The ripple effects hit immediately as thousands of construction workers faced unemployment, while suppliers scrambled to recover unpaid invoices that threatened their own survival. Phone calls poured into the governor's office from mayors across the islands, each reporting similar patterns of economic devastation in their communities. Maui's mayor described entire subdivisions where moving trucks outnumbered delivery vehicles. The Big Island's leadership painted pictures of volcanic slopes dotted with half-built homes whose owners had simply walked away rather than continue paying for properties they could never afford to complete. Even Oahu's traditionally resilient markets showed signs of capitulation as luxury high-rises reported occupancy rates plummeting toward levels that made basic maintenance impossible. The Hawaiian dream that once seemed unshakable has become a cautionary tale of economic hubris and political miscalculation. Governor Green's administration, caught between impossible choices and mounting pressure, now faces the harsh reality that paradise always comes with a price. As families continue their exodus from islands they can no longer afford to call home, the true cost of unchecked growth becomes undeniably clear for everyone to see.